A state's becoming very creative now.
Yes, there was an incredible burst of creativity among state legislatures and tax professors who are trying to figure out a way how to deal with this change to the state and local tax deduction, which they call, the acronym is SALT. And basically, it used to be unlimited. We could deduct state and local income tax and property taxes from our federal returns to, a large amount. The cap now is $10,000.
Right, and we're seeing now which states would be affected the most. New York, Connecticut, California, reading down from the top, happen to be, tend to go Democrat, not Republican.
Definitely.
Just a coincidence, I'm sure. It
Yes, I'm sure.
But so this is really a problem potentially for the federal government, because they passed a tax cut that was really predicated on their saving some money from things like this limitation on the state and local taxes. How concerned is the federal government about this?
Well, they ought to be concerned because when you run through the numbers, we came up with $154 billion, and that was just looking at 5 states. We looked at New York, New Jersey, California, Connecticut, and Illinois, and looked at sort of what if they moved to a payroll tax, which is one of the options being discovered, what that could mean in lost revenue.
Explain to us what would that mean. If you changed your state personal income tax to state payroll tax, then what happens here, and how much revenue would we taken out of the Treasury?
Mm-hmm. Yes. It would mean, there are 2 strategies states are talking about. They're talking about replacing or partially replacing the state income tax with the payroll tax, which would be on the employer. The employer would pay it. And they're talking about a charitable deduction scheme where you would donate to, say, a fund that supports education or health care, and you could deduct that against your federal return because charitable deductions are still deductible on your federal return.
Yeah, and for example, the first one is sort of an arbitrage because corporations can deduct their state taxes without any limitations. Individuals can't.
Yes.
So it says shift over. But as a practical matter, ultimately the IRS, the federal government, sets the regulations that apply to federal rules. And why wouldn't they come out with a rule that says, wait a second, that's just the same as your employer paying your income tax, and we'll charge you for that?
They may. This is sort of a high-stakes game that's going back and forth, a game of cat and mouse. And there's a lot of complications in putting a payroll tax together. There are legal implications, administrative burdens, if somebody, say, lives in New Jersey but works in New York. So the IRS may well come out and give some guidance or make a ruling that puts the kibosh on this. But it's an area of huge creativity that we're going to be watching in the next couple of months.